Greater Toronto area builders are starting to file lawsuits against pre-construction buyers who have walked away from their deals. It's getting very real now. As units sold at the height of the market are now starting to come for completion, if not already completed, and we're now starting to see an onslaught of buyers being slapped with builders' lawsuits. They're being sued. Builders are hitting back hard and they're hitting back aggressively, suing a lot of these buyers who have strategically walked away from their contracts. The market has always speculated on huge risks that pre-construction buyers were taking by walking away from their contracts and deals, intentionally losing their deposits, and just kind of like, I hope I don't get sued, I hope I don't get sued, right? Like they're crossing their fingers that they won't get sued for damages by the builder. Well, we're now starting to see all of this unravel into reality as builders have actually started suing these buyers. In this latest Toronto Star investigation, it's been reported that there's been at least 130 lawsuits brought by two big builders, CenterCourt and MOD Developments. Remember, this is just the start. The pre-construction market has tanked so hard that there's been a flood of buyers and investors who were unable to close on their units, whether on purpose or strategically. And one particular condo investor interviewed by the Toronto Star, detailed in this article that I'll be explaining in this video, says that he's being sued by CenterCourt for $860,000 in damages, plus taxes, plus other things for breaching the contract, on top of holding on to his deposit. Yep. The builder is suing very aggressively for the full price of the unit. Full price. Be sure to keep watching as I analyze the entire situation and whether the developers have the merit in suing them for the amount that they're being sued for. I'm also going to go through exact projects with the lawsuits and see just how many of these buyers close versus how many have actually defaulted. On top of that, I'm also going to dig in through some previous court cases where builders were not successful in suing for the full amount of the purchase price. So if you or someone you know is going through this, make sure you send them this video so that they have a little bit of understanding of what's going on with all the trouble in the pre-construction space. So be sure to stay tuned. Hi, my name is Zen. If you're enjoying my data-driven and number-crunching real estate updates, be sure to like and subscribe. So I'm going to be sharing my screen to kind of just review some of this kind of content of the Toronto Star article for you and then kind of add on my take of kind of what's happening. And just full disclaimer, I am not a lawyer. I am just providing my, opinion on this based on what I've seen in the past and speaking to other people and my own research. So the title is very catchy. Condo investor is being sued for $860,000 for failing to close. That's the biggest catching headline. So I'm going to read this out to you guys, can kind of just frame it, because as with most media headlines, they talk about from a person's perspective, so it's more relatable. So this person, who's a 41-year-old property manager, made a $85,000 deposit on an $855,000 condo in Forest Hill. So the first thing that you guys may not understand that I can see right off the bat is this person made a 10% deposit. And knowing how pre-construction works, because I'm in real estate, I already know that this person made a 10% deposit, which tells me that they bought at a later phase, because usually if you're entered into the beginning, they'll ask for 20% deposit. So my thinking right off the bat is this person already paid at a higher price than the launch price. And knowing that he could never qualify for the mortgage on the unit, that's the problem. This person is trying to flip the contract to make money. And then here's the other problem. The agent promised that they'll find a new buyer and sell it to them and make money. And all of that is a lot of problems, but I'm not going to get into it. But that's kind of where a lot of this stems from. And you'll see later kind of with some of the data I'm going to show you. Now, the Star has reviewed 130 lawsuits brought by two developers, being CenterCourt and MOD Developments. Now, keep in mind, there are plenty of builders in the Greater Toronto area. So these were just the lawsuits that the Toronto Star has gotten so far. There could be more than this, and it's just for two builders. I'm not surprised that it's CenterCourt, mainly because they have built very fast, so the closings came a lot faster. Are there going to be more in 2025 and 2026? 100%. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, put decades of experience to work for you. So right now they're saying that there's 5 different builders. So now what I'm going to show you is just some data I have compiled. And these were the ones that were named in the Toronto Star. So you got a Forest Hill condo, you got number 55, which is Mercer, then you got Westline, 55C on Charles, and 199 Church. And in the Toronto Star article, they have reported these amount of lawsuits per each building. And I just quickly pulled up the data on how much units there were in these buildings. And you can see right now that as a percentage, they're all sub 10%. So the amount of lawsuits that have been issued right now that we know of is sub 10%, which means that the building has no problem closing. Where I am concerned right now is what if this percentage sued column over here exceeds a certain amount that doesn't allow for the Condo Court registration. Then we're in a lot of trouble. But for now, we're okay. Now, one of the things that a lot of these defendants have cited is a force majeure, which is basically, in legal terms, an act of God. So again, I am not a lawyer, but I have went to a reputable website for the lawyer. And a lot of the times, court cases, when they go really high up, they reference previous cases. And I've seen a lot of this in 2017 when we had a huge run up in prices for pre-construction detaches and people failed to close in that situation as well. So this is actually one of them. And you can see that a lot of these court cases were like in 2018, 2019. So this one, if you want to read it, I'll put it in a link description below. This is the entire court case, but this is the one that this lawyer on their blog is referencing. They're basically saying that the purchaser agreed to pay $1.55 million and failed to complete the transaction. And you can see here the seller ultimately was able to sell the house to a different purchaser for $1.28 million. So then the Ontario courts awarded damages for staging, legal fees, the carrying cost of the property, the interest on the line of credit, and any potential professional fees from realtors. And most importantly, the difference in sale price, meaning that it was 1,555 minus 1,280. So that is what damages are as per this court case. So if I were to go through here in this example, why is this person being sued for $855,000? I don't know. Has the builder sold this unit? We don't know. This just makes for a very good headline. So based on the 2019 court cases, is this person going to be losing $855,000 plus damages? I don't think so. Based on this court case over here, it'll be probably whatever the builder has sold it for, and then the difference between the two plus all the costs as per here. And the good thing about this article is it also talks about over here where if you had the pandemic failure to close. And you can see right here says, unfortunately, no, this is not going to hold up in court. Now, I also wanted to highlight here, you can see that this lawyer is representing multiple buyers at 55 Mercer, and they're seeking $13 million in damages. 55 Mercer was a building that the entire real estate market was kind of watching because they were that interesting kind of case example that would have been seeing all of this, where they sold just before the pandemic, meaning before February 2020 in pre-sales. And then they also sold afterwards at a much higher price, and they were going to close very, very soon. They were actually going to close faster than some of the buildings that were sold on pre-construction in 2017, 2018 on the same street. So a lot of people are watching to see what would happen. And now we're seeing the result of this from this investigation. Now, this is where it gets very troubling. And if you're a pre-construction buyer in this situation, this is what's more important to you. You can see here that the values have dropped and unable to close, but he planned to either rent it out or potentially live in it. So this buyer who bought a unit at 55 Mercer had to sell it back and said they lost 27%. And the good thing is now that this building has actually registered, I can pull the data without disclosing too much to see what kind of damages that have been done, and I can share it with you. So you can see here, this is a chart that our team put together, and these are all the units that have essentially resold on the MLS. So if you imagine anyone who bought a pre-construction would have bought as a contract and then they would have closed it. And if they kept it, we could see that. But if they never close it, it still remains on the builder's registry and then hasn't had a record of it closing. The ones that you can see highlighted in yellow are those situations where the builder has ultimately sold that unit on MLS for here, but we don't know whether the person that originally bought it defaulted or not, or then closed or not. All we know is that it's being sold by the builder at a different price. We can all suspect maybe the original buyers did not close on it, and then this is where the lawsuits could potentially happen. Now, the blue highlighted ones are the ones where, similar to this gentleman over here, said that he closed on it with the builder so that he wouldn't get sued by the builder, but then he subsequently sold it afterwards and then he took a loss. And those are the numbers that we can find. So you can see highlighted in blue, a lot of these were the original purchase price because we could see it. And you can see what they originally bought it for on a price per square foot for this type of unit. And you can see that when they resold it for this, they sold it for this price per square foot. So you result in the losses over here. So you can see the largest one being $312,000, which is a 27% loss. And these losses do not account for development charges, professional fees from like realtors, any kind of closing costs, and land trust tax. So actually the losses, when you add it all up, could be more than this. And this is why it's very detrimental. Now, the thing that's interesting, like I said, about this building is that this building sold, you can see over here, for a starting price of 1,168 square foot. And they launched some of it in the beginning. And then towards the end, after there was a huge run up in like 2021 and 22, the builder released some more units. And this is why you could see that some of the people have purchased it for $1,600 a square foot. And that's kind of where a lot of the problems are. Because you can see a lot of times over here, the original buyer who bought this, none of these bought it for like $1,100 a foot. Because if you bought it for like $1,100 a foot, it's still worth what it is right now, as you can see of what, someone's willing to pay for it, right? And this is also what the builder is selling it for too. So it's the people who bought at a higher price point. So a lot of this really depends on what you bought your pre-construction for. So I wouldn't lump the entire like number 55 building as like everyone's going to fail. That's not the case. There are cases like that in the future for buildings that were sold post-pandemic in like 21, 22. And we do have some of them coming online. And that's going to be the kind of interesting ones. And I think this is one of my biggest problems with this market right now is unit values will drop, hurting purchasers who are unable to finish the deal. So for instance, if a purchaser closes on a unit for $800, but a glut of the unit is sold for 40% less, it drags the value down of the entire building. So let's look at this data and let me just illustrate an example. If new buyers are buying this at say $1,100 to $1,200 a square foot, which I would say is actually market, then anyone who closed at 15, 16 is immediately underwater. So the question for them becomes, do you want to lose money slow through negative cash flow? Or do you want to lose money fast and you eat these massive losses? So the question becomes like, how much negative am I losing per month divided by how much I would actually lose? And that's a conversation people are asking me a lot when they book a call with me. And it's just hard because most people, it's like, I don't want to lose this money right away, so I rather go slow and lose it. So the problem of hoping that the values come back is that you have a lot more going against you for the values coming down. So you imagine this building over here, so number 55, there's 543 units. Say it's 50 floors. So that means there's roughly like 11 units per floor. All you need is one person, so 1 out of 50 that has the same unit as you, sell for a lower price per square foot. And there you go. Your value of your unit you own just came down. And there's more likely people that are going to be selling as they slowly bleed and bleed and bleed. So the question becomes is, can you sustain that cash flow negative relative to one of the people in the building with the same floor plan as you can sustain it at the same pace? Because if say, you and one of the other 50 units can sustain it for a year, and then somebody in year 2 is like, oh, I can't do this anymore, the market's not great, and then they sell for like $1,000 a foot, that entire stack just got worth less. And that's the problem that this sentence here is drawing out. We're going to see this happen over and over again because people bought at maybe really high elevated prices and they can't sustain it. So there's more motivation for a lot of these condo sellers to sell it for less because they're hurting more over the next few years before there is a market recovery. So even say if the market starts to rebound or stays stagnant, you have to understand there are buyers in this stack of condos that may be motivated or bleeding very hard to sell in the future before a big recovery. And that's the challenge when you are $300-400 a square foot above market. To make matters worse, pre-construction sales have crashed to a new low. If you thought last year was bad, it is even worse this year. Go watch this video where I break down just how bad it has become. And on silver lining, I even talk about what may bring the pre-construction market back to life in the future, whatever that may be. So go check out that video. I'll see you in the next episode. And remember, your move, your future. See ya.